Hello, I am Tibor Solet, the Chief Researcher of the Adrianople Group, and today I'll be talking to Erik Autor, who is the President of the National Association of Foreign Trade Zones. Foreign trade zones are a key pillar of U.S. trade policy. They are areas where businesses receive the same customs treatment as if they were outside of the U.S. There are many strict requirements and very interesting legal implications of being based in a foreign trade zone. The program started in the 1930s. During the Great Depression, the government implemented Smoot-Hawley tariffs. The goal of these tariffs was to artificially increase the cost of importing. This would have stimulated domestic production, creating jobs for U.S. workers. The program backfired. It also increased the cost of exporting, and it made the price of getting raw materials for export much more expensive. In order to mitigate the damage from the tariff, the U.S. government created the Foreign Trade Zones program. The program has evolved a lot over the years and become increasingly important. Now, many points of entry into the U.S., including border crossings, trains, airports, railroads, ports, even certain other areas like other facilities, which we will be talking about, have become foreign trade zones. Because of the trade wars between China and the U.S., foreign trade zones have become very important, both in terms of the impact that the trade wars will have on the zones themselves, but also whether or not the program could be evolved to mitigate the impact of the trade war with China. Today I have the great pleasure of talking to Erik Autor, who is probably the single most qualified person in the world to talk to about foreign trade zones. He received a JD and LLM from the Duke University School of Law and a Master's in Economics from the London School of Economics. He began his career as a clerk to a federal judge at the U.S. Court of International Trade and was an associate attorney for several years. From 1992 to 1998, he served as the International Trade Counsel and Senior International Trade Counsel to the Senate Committee on Finance under two different senators. For 15 years, he served as the Vice President and International Trade Counsel at the National Retail Federation, the world's largest retail trade association. In August of 2016, he became the President of the National Association of Foreign Trade Zones, or NAFTZ. The NAFTZ is a nonprofit advocacy and education group for the foreign trade zones industry. It is also a powerful lobby. It is currently researching best practices with major groups like the OECD to stop various international problems such as drug trafficking. It has done a fantastic job at fostering the ecosystem of the foreign trade zones industry through its trade publication and through organizing conferences. I first met Erik Autor at an NAFTZ conference in Washington, D.C. in 2017. I also ran into him at several other conferences on foreign trade zones internationally, in Colombia and in Barcelona. He is very nice and he is very knowledgeable, and it is with that I would like to introduce Erik Autor to the Geoeconomics podcast. Erik, thank you very much for coming on board. It's nice to have you on the show. So my first question for you today is, what is a foreign trade zone?
Well, I'm pleased to be on the show. In the United States, a foreign trade zone is a secure, designated geographical area that's considered outside the customs territory of the United States for purposes of collection and payment of customs duties. FTZs are located in all 50 U.S. states and Puerto Rico at or near U.S. customs ports of entry and can be as small as a single warehouse or, in the case of Hawaii, as large as an entire state. They are the U.S. version of what are known internationally as free trade zones, but with some unique and important differences. Within U.S. FTZs, companies can conduct manufacturing and distribution operations without having to pay customs duties or fees until merchandise is withdrawn from the zone into the U.S. customs territory for domestic consumption. Generally, no duties are collected on products exported from a U.S. FTZ for consumption outside the United States. This system is designed to equalize the tariff treatment with imported products, thereby enhancing the competitiveness of U.S.-based companies over imports.
So from the perspective of a complete layperson, if they were to enter a foreign trade zone, what are the kind of things that they might look at, and what are the kind of places that somebody might have been, maybe like an airport or a dock, that would be a foreign trade zone?
Yes, foreign trade zones, as I said, are generally at or near U.S. customs ports of entry. So that could be a blue water port, it could be an airport, it could be a land border crossing. So what you would see at a U.S. FTZ would, first of all, be a fairly secure facility. It may have a fence, it would certainly have cameras and whatnot, and controlled access into and out of the facility. But other than that, it may look very much like a regular factory or a warehouse. With products being manufactured or goods being stored. So it would not look all that much different than a facility outside a zone, with the possible exception of the enhanced security measures.
And what kind of businesses take advantage of the foreign trade zones? Why would a business want to operate in a zone instead of just any old place?
Right. Well, as I mentioned, most of the companies that operate in zones, they represent a variety of different industries, but generally are engaged in manufacturing and or distribution. The main benefits of the FTZ program come from savings in customs duties and fees, and the efficiencies in cash flow and supply chain management. Now, these benefits divide specifically into certain things that I'll explain, and it will also show how the zone program operates. The first are direct duty savings. These are savings in customs duties, taxes, and fees. There are three aspects of this. There's reduced duties. FTZs offer manufacturers relief from what are called inverted tariffs. That means when the imported parts carry higher duties than the finished product into which they're incorporated. A couple of examples of this are the automobile industry, which has up to 5% tariff on auto parts, but there's only a 2.5% tariff on a finished automobile. And in pharmaceuticals, tariffs remain on many active pharmaceutical ingredients, but the finished pharmaceutical product is duty-free. So in this instance, the inverted tariff actually favors importing the product at the lower tariff rate rather than manufacturing it at the U.S. Using imported inputs with a higher tariff rate. What the FTZ rules allow is for manufacturers to avoid paying the higher duties on the imported inputs and claim the lower duty rate of the finished products on the imported content incorporated in the finished product. So that's the reduced duty benefit. Deferred duties, excise taxes, and customs user fees. FTZs allow importers to delay payment until a product leaves the zone and enters U.S. customs territory for consumption. So imported merchandise may move in bond, port to zone, and zone to zone without payment of any duties, excise taxes, or customs user fees. There's no time limit on goods remaining in a zone, unlike bonded warehouses or temporary importing under bond programs. And the harbor maintenance fee, which is a fee that's assessed on imports for dredging of harbors, is paid quarterly, not on the arrival of the goods onto U.S. soil. Then the third duty benefit is duty elimination. FTZs eliminate duty and quota charges for any merchandise that's exported from a zone to a third country, with the exception of exports to Canada or Mexico under NAFTA. They do not assess duties on domestic inputs in products that are manufactured in a zone, and that may include imported goods where the duty is already being paid. Don't assess duty on labor, overhead, and profit attributable to the zone production operations, and no duty is assessed on scrap, waste, or goods destroyed as defective, obsolete, or surplus. So those are the duty benefits. When you're facing quotas, in most cases, FTZs allow imports subject to a quota to stay within the zone after the quota limits are reached. This gives zone users access to potentially discounted inputs and the ability to admit merchandise when a new quota year starts. input subject to quota, except certain textiles may be manipulated or manufactured while in the zone into a product not subject to a quota. Then another direct benefit is called weekly consolidated entry. FTZs allow manufacturers and distributors to file a consolidated entry each week instead of filing numerous individual entries. This streamlines supply chain and inventory management. It lowers the cost for the merchandise processing fee, which is a customs fee that's assessed on all imports. It's an ad valorem fee that ranges from $25 to $485 per entry. So for instance, instead of paying $485 on 10 entries through the FTZ program, you could theoretically consolidate all those entries into one entry and only pay once the $485 maximum ad valorem user fee. Filing fewer entries also means that you have significantly reduced broker fees as well. So those are all the direct savings that are available through the program, and explains how the duty benefits work to the advantage of FTZ companies. There are also indirect savings. First, in supply chain management. You get better supply chain management through the FTZs, which afford companies greater flexibility and visibility. There are more robust inventory and security controls, and there's automated record keeping and document storage. Re-export, there are fewer and simpler regulatory requirements for re-export of goods from a zone. Zone-to-zone transfers are simplified with less paperwork. Direct delivery of merchandise to a zone may be done without prior application and approval by customs, which also streamlines supply chains and reduces cargo delays and lowers administrative costs. The system called the Alternative Site Framework, or ASF, gives participating zones greater flexibility in designating new FTZ user locations by streamlining and simplifying and shortening the application process, making the program more accessible and affordable than under what was the old traditional site framework, and facilitates zone activities, modification, and expansion within existing operations and service areas. FTZs also afford companies improved compliance from better inventory and security controls. There are more stringent rules for FTZ operations, requiring closer relationship with customs. Customs views FTZ operators as lower commercial compliance and security risks than other importers, and Customs views the FTZ program as a security best practice. There's improved financial management and cash flow, also reduced borrowing and insurance costs from low security and commercial compliance risk status, simplified accounting and operational procedures. The program helps eliminate time and expense of filing drawback claims for refunds of duties paid, because you don't have to pay the duties on export under the program. You don't have to claim a refund of any duties paid, as do normal importers. And it lowers the cost from more efficient customs processing. So that is a broad overview of all the benefits of the program, and explains, I think, how the program operates.
So, how many foreign trade zones are there in the United States?
Yes, according to the FTZ Board's 27 annual report, which contains the latest statistics on the program, there are 191 active foreign trade zones in the United States. If you add in subzones, the total comes to over 630. And as I mentioned earlier, that covers all 50 states and Puerto Rico. The U.S. FTZs directly employ more than 450,000 Americans, and they also represent a significant portion of U.S. commerce, accounting for over 10% of all imports into the United States and 5% of all U.S. exports.
So, what are some of the largest and most successful foreign trade zones in the country currently operating?
Sure. With 32 zones, Texas is the state with the largest number of FTZs. Not surprisingly, the largest and most trade-dependent states also account for a large number of FTZs. These include Florida with 21, California with 17, New York with 15, Washington State with 12, and Ohio with 9. However, some zones are more successful than others, which is attributable to a number of factors, including proximity to major transportation hubs, including blue water ports, rail lines, interstate highways, and major airports, as well as proximity to major markets and population centers. So these areas would include urban areas such as Los Angeles, Chicago, Houston, New Orleans, Kansas City, and Atlanta. The size and economic footprint of certain sectors also have been a major factor in the size and success of zones in which they're located. These would include the automotive sector, such as BMW in South Carolina, which is the largest exporter of US-made automobiles, Daimler-Benz in Alabama, Toyota in Kentucky and Indiana, and Nissan in Tennessee. Also, the petroleum sector has been a major factor in the success of FTZs in states like Texas and Louisiana. Other than the automotive and petroleum sectors, other big industries using the FTZ program include pharmaceuticals and electronics, petrochemicals, textiles and apparel, and aerospace.
So, how did the program start, and why did the U.S. government create the Foreign Trade Zones program, and what was sort of the background history and the context for this, and what were the first zones?
Sure. Congress created the U.S. FTZ program with the passage of the Foreign Trade Zones Act of 1934. So that was quite a while ago, and the U.S. FTZ program is one of the oldest in the world. The program was created as a way to boost international trade and mitigate the adverse economic consequences of the infamous Smoot-Hawley Tariff Act of 1930, which had been a significant contributing factor in deepening and expanding the Great Depression. The program is administered by the U.S. Foreign Trade Zone Board, which is located at the U.S. Department of Commerce in Washington, D.C., but the program also runs under the supervision of U.S. Customs and Border Protection. The FTZ board is jointly chaired by the Secretaries of Commerce and Treasury. Over the past 85 years of its existence, the FTZ program has grown and evolved considerably.
Before we go there, I want to ask you a few more questions about the 1930s. So, has any research been done to find out which political groups lobbied for the zones and which political groups opposed the zones at the time of the 1930s? Or was it sort of a non-controversial kind of thing?
I don't know. I haven't done that research, so I'm sure it's out there, but I don't know. We were in a Democratic administration at that point. Franklin Roosevelt had just become president, so I suspect it was, that the Republicans had supported the Smoot-Hawley Tariff Act. So I don't know how this broke out politically. So I would have to do more research on that.
All right.
Answer that question. But the very first zone created in the United States was in New York. And some of the early zones included San Francisco and New Orleans.
Right, right. Yeah, it's always a very interesting question because I was, for example, talking to a lawyer who was making these environmentally friendly pallets in Washington, D.C., and he was explaining to me how his efforts were being hindered by the wood pallet lobby. And it's there's sort of this school of public choice economists who predict that behind every piece of legislation, regardless of whether or not it's good or bad legislation, it's just there's always going to be this sort of factionalism, except in some of the most procedural things. So it's this very interesting trait. To what extent is there still sort of this element of factionalism today? And are there any lobbies that are strongly opposed to the Foreign Trade Zones program? And are there, on the contrary, any lobbies that would generally support it?
Right. Well, since FTZs are located in all 50 states and are seen as contributing to local economies and employment, I'd say the program has enjoyed broad bipartisan support among local, state, and federal government officials and legislators, and that breaks across party lines. That said, however, the support has been somewhat limited by a widespread lack of knowledge about the program, which is why our lobby and educational efforts are heavily focused on explaining the benefits of the program to policy and thought leaders. As far as lobbies that may oppose FTZs, we're not aware of any that have been specifically focused on opposition to the FTZ program. But there are certain lobbies that seek to advance a protectionist anti-import agenda, which can threaten to adversely impact the program indirectly. These would include certain protectionist industries such as textiles as well as organized labor. Although the program is a significant driver of U.S. employment, investment, and exports, the fact remains that it would not exist without imports. So that in and of itself can create some political challenges.
What would be some of the major criticisms? Actually, I would like to first go through a few criticisms of the FTZ program that I've heard, and then we can go into other criticisms. So, I've heard people make the argument that the whole country should have a free trade regime, and that the foreign trade zones work and attract the business because they sort of have certain rules and regulations that should just exist everywhere else in the country. So, what would you say to the argument that why do we want foreign trade zones when we can just have these rules on a national level change?
Well, I think heaven would be having the country be one big foreign trade zone, but as a political matter, that just isn't realistic, at least for the foreseeable future. So in the meantime, we're operating under a system that has a variety of restrictions and import restraints and tariffs that are applied for political reasons. And all these make increase the need for the foreign trade zone program. So as long as we have that system, I expect we will have a foreign trade zone system in the United States.
Yeah, that makes sense. What about the other criticism that there might be some need for some local differences in regulations, but that the businesses who operate in the foreign trade zones enjoy an unfair advantage? For example, earlier when we were talking about sort of the regulatory benefits and the regulatory advantages of the foreign trade zone, regardless of the actual merits or dismerits of these regulations, one key thing that struck to me is that it seemed like it was very complicated. And I imagined that there would be certain companies who have economies of scales and can afford lawyers and stuff like that to fully take advantages of the benefits of the foreign trade zone. So how would you answer to that argument that it's sort of unfair?
Well, the compliance obligations placed upon FTZ based companies are greater than normal importers, but any company that's importing is going to have to work out the compliance obligations one way or another, hiring a customs broker, hiring a customs lawyer, having the proper procedures and software systems in place to be able to comply with the import rules. I mean, that just goes with the turf. So if you're in that space, the program is open to, a wide variety of companies. And when you see the size of operators, yes, there are certainly big, very large companies that are operating in zones, but there are some smaller ones as well, and have been able to do so successfully. So regardless of whether you're inside a zone or outside a zone, you're going to have costs associated with managing a global supply and value chain, no matter what your size. And yes, some of the upfront costs for FTZs are high, but you can recoup those costs very quickly through the savings that are available through the program. So I don't think that that's an entirely fair comment. the program is generally available for those whose business models, it makes sense for them, given their business model, to locate in the zone. But as far as other criticisms about the program, we hear three other criticisms. I think the first is that the FTZs are a duty avoidance scheme that mainly benefit foreign companies. So that I think that is another inaccurate view that represents a fundamental a misunderstanding about the program. Congress created the program intentionally to provide a system of duty benefits through the program to equalize duty treatment for U.S.-based companies vis-a-vis their foreign-based competition, and it's been very successful in doing that. Also, the program has incentivized many foreign companies to shift from production in a foreign location for export to the United States to production in the United States, employing American workers and contributing to American communities. So that really raises the question how anyone could see that as a negative thing. One of the other arguments that we've heard about FTZs is that they can be used to avoid trade remedies, anti-dumping, countervailing duties, and special trade action duties such as Section 201 safeguards, Section 301 duties, and Section 232 national security duties, etc. This is simply false, and we've spent a lot of time debunking that view. The program, in fact, has specific rules and restrictions that prevent it from becoming a means to circumvent these duties and ensure that FTZ importers are treated the same as other U.S. importers in the assessment of these duties.
Have there been any, maybe prominent cases in the media of companies attempting to use FTZs to escape duties, even if what they were doing was, technically or was illegal? Has anyone been caught trying to do this?
Occasionally, but not recently, that I'm aware of, at least. In fact, the compliance rates among FTZ companies is significantly higher.
Can you give me an example of one of the cases in the past where someone was caught trying to avoid duties using an FTZ program, and sort of what it looked like, if you know any cases?
I couldn't off the top of my head. There are. I would have to do some research on that. I don't have a case example in mind. No.
All right. I was just kind of curious about that, because I imagine that if there had been a few cases of that had been very prominent, it would play a role in shaping opinion, and it would be usable by.
We have not had any prominent cases, and as I said, none recently. There are always enforcement actions for violations of various trade rules, like trade restrictions with Iran and Cuba and so forth, but those don't involve FTZs. As I said, the compliance rate among FTZs is quite high, and quite frankly, the consequences are even greater, because you can be facing criminal sanctions, including possible jail time for violations of certain trade laws. And in addition, you will lose your benefits under the program. You'll get kicked out of it, and that is a significant. That can be a significant financial hit. So, there's some pretty stringent consequences for egregious violations using the FTZ program, and I think as a result, enforcement cases have been relatively rare. The third criticism that we've heard about FTZs is that they can be a conduit for illicit trade. And while this may be a problem in free zones in certain other countries, the U.S. program unfortunately gets sometimes painted with that brush as well. But both Customs and Border Protection and the Organization for Economic Cooperation and Development, the OECD, which is leading a an initiative on illicit trade in free zones in other countries. They both recognize that the U.S. program is not a problem for illicit trade and indeed represents a model for good enforcement and compliance practices.
What do you think is the future of foreign trade zones looking forward? And I'm specifically interested in the question of how Donald's trade wars will affect the FTZ program.
Right. Well, one of the biggest impacts of the Trump trade policy has been its unpredictability. Um, you know, Trump announces trade actions by tweet, and that's often followed by implementation within days. And so, looking at specific examples include withdrawal from the Trans-Pacific Partnership Agreement, the threat of withdrawal from NAFTA, the Korean FTA, the World Trade Organization, the aggressive use of trade remedies that we've seen over the past year and a half, where the time between announcement of a tariff action and implementation is very short. So all of this has come with little notice or time to prepare or even opportunity to provide meaningful comment to try to influence the process. So I would say that it's the unpredictability of the Trump trade policy that has had the biggest impact. And we've seen different types of rules specifically with respect to FTZs, depending upon the type of action. And that also increases the unpredictability specifically for FTZs. So, while all U.S. based companies are affected by the unpredictability of the Trump trade policy, FTZs definitely are as well, and in some cases in specific and unique ways.
What would be some of those specific and unique ways?
Well, one is just the nature of how the import transaction occurs in a foreign trade zone. Normally, it's just one step. The good arrives at the port of entry, an entry is filed, and customs duties are paid. That's the normal import process. With FTZs, it's actually a two-step process. Goods arrive at the port of entry and move in bond from the port to the zone, where they are admitted into the zone. So the admission is the first step, but no duty is paid or entry made. Then the goods remain in the zone for some period of time until they are withdrawn for U.S. consumption, and at that point an entry is made and whatever duties are owed are paid. So it's a two-step process, and so that complicates things on the application and the effective dates of these various trade actions. For instance, what happens if your goods have been admitted into a zone before the duties are applied, but are withdrawn and entered after the duties are applied? What duty rate applies to those goods? Conversely, what happens if the duty is in effect when the goods are admitted into the zone, but are then rescinded or there's an exemption provided when the goods are withdrawn from the zone? So we've had to get clarifications on every single trade action using these specific examples. Because it isn't clear from the guidance that the administration and customs have provided on how and when the trade remedies are imposed on goods in a foreign trade zone.
So there's also this recent legislation for opportunity zones that have been passed. And this has prompted the idea of something called a stacked zone, where you would take a foreign trade zone, stack it on top of the same geographical area that has an opportunity zone, and then on top of that, stack it on top of state and county level zone initiatives. For example, California had some enterprise zones, and Baltimore had some empowerment zones. So you'd essentially be stacking these different zone programs to create a sort of makeshift special economic zone. And there's some real estate developers who have been looking into this idea. Do you think that it has any merits, or what would be your general thoughts on an idea like this?
Well, I think it's an intriguing idea. I quite frankly don't know a whole lot about the enterprise zone initiative and how that might interface with the US FTZ program. You know, to ensure the success of a foreign trade zone requires certain specific elements, including, proximity, as I mentioned, to transportation infrastructure. And that may or may not work in a place that's eligible to be an enterprise zone or a special economic development zone. So I think it's an intriguing idea. I'd like to see what happens in practice and how it plays out, whether it can be a successful model or not. I really am not sure, but it's certainly an interesting idea that's worth looking into.
Yeah, it would be very interesting. What trends do you see in the FTZ industry? How has the industry been changing over the last decades? For example, is blockchain technology, do you see any blockchain technology potentially being used perhaps for logistics and supply chain management, or maybe zone governance and regulatory compliance?
Well, I think a lot of people, including foreign trade zone stakeholders, are looking very closely at blockchain and how they might be able to use it to improve the efficiencies of their logistics operations and their compliance activities. I think it holds a lot of promise, and there, as I said, there's a lot of interest in it and a lot of discussion about it. I think it's still early on, and there's still a lot of work to be done to apply it effectively and efficiently, not only in the zones context, but overall in the management of supply chains and in compliance, including on corporate social responsibility issues and tracking products through the supply chain back to the origin, and to ensure that not only security and customs requirements are met, but the requirements of all other aspects of enforcement, including health and safety and labor rights and environmental requirements and so forth.
Besides the trade wars, what sort of challenges do you anticipate? What sort of threats are there looming on the horizon?
Well, with respect to the trade wars, the ability of FTZs to mitigate the effect of those trade wars is limited. One important exception is the ability to avoid duty payment on FTZ products that are destined for export. But some of the challenges, I would say growth in the FTZ program has been slowing for some time. There are a variety of reasons for this, including the fact that most places that can support an FTZ already have one. Also, we're still emerging from the adverse impacts of the Great Recession. And there have been significant changes in U.S. energy production and use that have had a fairly big impact on the petroleum sector, which is a major user of the FTZ program. And finally, the program may require new benefits and better marketing to be able to grow and accommodate changes in the global economy and commerce. I mean, I think the program is under a constant challenge to evolve in a way that's going to ensure its sustainability over the longer term, as we're seeing significant and rapid changes in the global economy and commerce. And that's a big challenge because these changes don't happen overnight. Two areas where we do see growth in the US FTZ program is in the number of subzones that are being created under the expedited application process I mentioned, called the Alternative Site Framework. Also, there's been growth in the use of FTZs for distribution. And we've also seen significant increase in employment figures and the value of merchandise moving through FTZs. although that may be largely attributable to the robust economic growth we've been experiencing for the past few years. So we may not see a significant increase in the number of zones or the number of operators in zones, but the existing operators in zones have seen a significant increase in their business activity in the zone, which has resulted in increased employment and increase in value added.
We'll get more into the NAFTZ a bit later, but is currently trying to promote legislation to improve the competitiveness of FTZs. What kind of legislation is the FTZ trying to promote, and what would such legislation look like in practice?
Well, we're working on 3 legislative proposals right now. The first one addresses what I would call an existential threat to FTZ manufacturers, and this results from the misapplication of the Section 201 safeguards duties on washing machines and parts and solar panels and cells, and the 301 duties mainly on China, but also the pending ones on the European Union on products manufactured in a zone. Certain technical requirements on the way FTZ manufacturers report country of origin of their foreign inputs when the final products that they manufacture are withdrawn from a zone have resulted in the improper assessment of duties under these trade actions on foreign content in FTZ manufactured products when that foreign content is not from the subject country, for example, China, or not on the list of target products. We would argue that applying these duties on products that are foreign status products that are not from a subject country and are not a subject product is contrary to law. But it also undermines key benefits, objectives, and rules of the FTZ program. So we're at a point where we're looking for a legislative solution to ensure that this is corrected now and does not happen in the future by clarifying the tariff treatment under these various actions in the FTZ context and for FTZ manufactured products. Our second legislative initiative addresses an existential threat to FTZ distributors. The first one was impacted FTZ manufacturers. This impacts distributors. And it results from the passage by Congress in 2015 of trade legislation that increased the duty-free de minimis level for imports into the U.S. from $200 to $800. The simple example of this is when you're traveling abroad and you return to the United States and you fill out a little customs form and it says if you're importing anything under $800, it's duty-free. That also applies to companies. So CBP, Customs and Border Protection, has ruled that FTZs are not legally able to claim this duty-free benefit. And this has inadvertently created a significant incentive to pull distribution activities, particularly in e-commerce fulfillment, out of US-based FTZs and move them to foreign locations, particularly Canada and Mexico, which can take advantage of the duty-free de minimis benefit.
Right, because it's like if their goods would penetrate U.S. markets through the FTZ, they wouldn't have this $800 exemption. But if the goods penetrate the U.S. through Canada, then they do get this $800 exemption.
Yeah, a good example is let's take a sweater that's imported from Asia at a 35% duty. The sweater comes into the United States, into a U.S. FTZ at a distribution center located there, and an order is placed for that sweater. Once that sweater is withdrawn from the zone and sent to the U.S. customer, the importer has to pay the 35% duty. But if they move that distribution center, say, to Richmond, British Columbia, right by the U.S. border, they could bring that sweater into Canada duty-free, free from Canadian duties because it's destined for export, sits in a bonded warehouse in British Columbia, and then when the order comes in, they can send it to the U.S. customer duty-free if it's under $800. So, I mean, the economics of this are pretty simple. You pay the duty if you move it through a distribution center in the FTZ, or you don't if you move it through a distribution center located outside the United States. So we're trying to get legislation that would equalize this and allow e-commerce fulfillment through U.S. foreign trade zones, and allow them to take advantage of the duty-free de minimis benefit that Congress passed in 2015. The third legislative initiative is an effort to eliminate, through the implementing legislation for the U.S.-Mexico-Canada agreement, two restrictions that exist under the NAFTA that prevent FTZ manufacturers from claiming duty benefits under the rules of origin. NAFTA implementing legislation basically states that certain programs like the FTZ program in the United States are ineligible for duty benefits under the NAFTA rules of origin, whereas competing manufacturers in Canada and Mexico are obviously eligible for those duty-free benefits. The other restriction requires FTZ manufacturers to file a U.S. entry and pay applicable duties on FTZ products destined for export to Canada and Mexico. I'd mentioned earlier that one of the benefits of the FTZ program is that exporters do not have to pay duty, with the exception of exports to Canada and Mexico. And we feel that both of these restrictions are unfair, they're unnecessary, and they provide an advantage to Mexican and Canadian manufacturers over U.S. FTZ manufacturers that basically incents the movement of production out of the U.S. to Canada and Mexico. And it also undermines the goals and benefits of the program. So those are our three big legislative initiatives right now. And I think if we can get these three main pieces of legislation through Congress, it would be a significant step in assuring the future viability and sustainability of the U.S. program. I would just generally like to explore ways in which companies could better leverage the global zone system to maximize efficiencies in their global supply and value chains, and enhance the benefit of the zones program as a magnet for investment and employment. What that would look like is something that we still need to explore further and consider carefully. That's why I'm very interested in looking at other zone systems and see what sort of benefits they offer and whether that might be applicable in the United States. I'm also really enthusiastic about the collaborative efforts between the OECD and the World Free Zones Organization, which is the global association representing the zone system around the world, to address the problem of illicit trade in certain foreign free zones, and to instill a strong culture of compliance in the global zone system as exists here in the United States. And we're pleased to be a part of that collaborative effort, and in part providing examples from the US system that might provide models for improving compliance in other countries.
My last question for you today is going to be, can you tell us a bit more about the NAFTZ and what you guys do and how you contribute to the Foreign Trade Zone program?
Yes, well, glad you asked the question. The National Association of Foreign Trade Zones, or NAFTZ, is a trade association that was founded in 1973. It's headquartered here in Washington, D.C. NAFTZ currently has nearly 700 members, which includes FTZ grantees. These are the states, cities, municipalities, and other public entities that apply to the government for zone status. Then there are the operator users, which are the companies that use the program for manufacturing and distribution operations. And finally, the third group of stakeholders are the service providers who offer legal, IT, investment, and other consultative services to the two other groups. In fulfilling the association's mission to serve as the principal educator on and lead advocate for the FTZ program in the constantly evolving environment of international trade. NAFTZ does several core activities on behalf of its membership in the program. The first of these is representation. The NAFTZ is the collective voice of the U.S. Foreign Trade Zone program and the community of public and private stakeholders, which I mentioned, the grantees, operator users, and service providers. Our second major activity, is on advocacy. NAFTZ promotes the FTZ program and advocates on customs, international trade, and other issues impacting the program and its stakeholders. A fourth area of activity is education. NAFTZ is the lead educator on the FTZ program's value as a tool for expanding economic development, competitiveness, employment, investment, and global supply and value chains. And the final area of activity is best practices. NAFTZ provides information on and helps drive the establishment of industry best practices, including on compliance. So that's generally what we as a trade association in Washington do on behalf of our members and the program.
Well, thank you very much for talking to me today.
My pleasure. Glad to do it.
All right. Have a good day.
You too.
That was Erik Autor, President of the National Association of Foreign Trade Zones. I would like to thank Erik and the NAFTZ for gracefully coming on to our podcast and talking to us and having such a great conversation today. This podcast is brought to you free of interruptions and advertisements by the Adrianople Group. The Adrianople Group is a business intelligence firm specializing in the global economic zones industry. We work with a wide variety of zones around the world to provide services such as due diligence, investment attraction, zone marketing services, risk analysis, geopolitical intelligence, data mining, and cybersecurity services to zones around the world. For more information, please visit our website, adrianoplegroup.com, or click in the link in the description. Thank you very much once again for listening to the Adrianople Group podcast.